Hey, what's up, everybody? Happy Monday. Kellen Keck here, City2Shore Port City Associates. Hey, wanted to do a video and kind of discuss one of the trends that I'm seeing out there with a lot of the buyers, even the sellers that I'm talking to. Everybody wants to wait. We're going to wait until spring. We're going to wait until inventory comes up, comes down. We're going to wait till interest rates come down. Everybody wants to wait. Now, I know this isn't the most opportune time of the year for a lot of folks. Buying during the school year, buying during the holidays, can always seem like it's just that you got to put that on the back burner. You got too much other stuff going on. But the reality is that this might be one of the better times of the year to buy, and I'm going to show you why. So a couple of things here. I got pulled up on my screen. This is my MLS dashboard. So when I log into the MLS, before I go looking at any listings or anything like that, I always take a glance at this right here. So my listings, things like that. But these charts right here, inventory, absorption rate, and prices, and then my hot sheet. So this gives me all the new listings, what went under contract, price changes, things like that. But I wanted to go over these charts right here real quick. And inventory and absorption rate are kind of one and the same, just a different measure. This is actual numbers. This is the amount of months that it would take to sell through if we didn't put any new inventory on. And then this is prices. So our industry is very cyclical. Okay, real estate has always been that way. Spring and summer months are always going to be busier. We're going to see less inventory as we come out of the winter, and then it starts to ramp back up. So inventory, same thing. Goes down January, February, March, and then it starts going back up. So in September, we're right back kind of where we were in October of last year. It's pretty much the same thing, right? So absorption rate, same thing, is level of inventory. So 2 months, we've been hovering anywhere between 1 and 2.5 months for the last few years. 6 months is considered a stable market. We are still not even close to that. And you can see again, October of last year, it dips down in December, January, February, March, April, and then it starts to go back up as things start to ramp up for the spring season. And here we are back almost where we were in October of last year. Same thing. And you saw how quickly this inventory dwindled as we got into the spring months. So do we want to wait until this cycle comes in and there's less inventory, and then we're fighting over it? Or do we want to buy at this point where there's inventory to shop around? Because here's what happens too, is we see these prices, okay, these prices come down and then they go back up. Now, if you'll notice here, they go up further than where they were in October of last year. So even though they come down, they go back up through that demand. So as the demand goes up in the spring and in summer months, okay, February, March, April, May, things are ramping up, June, July, and then it starts to taper back off. And we're going to see it again, except the problem is if I continue this cursor, it's going to go here and then come back up here. Okay, so now look at where I am here. Now you can't see my fingers, I'm pointing at the screen, but look at where I am here versus this. This is the concern of why we may not want to wait. One thing I always say is you can always refinance to get a better interest rate. You cannot refinance to get a lower purchase price. That's just the reality of it. So one of the things is this graphic here. So I'm going to wait until spring. Well, so are you and everybody else. Okay. Everybody's got the same mindset. So why not get ahead of the curve and start looking at your options now? Okay. So buying now, interest rates may be a little bit higher, and they've held steady as our inflation surveys kind of stayed stagnant. That is what it is. There's a Fed meeting 2 days after the election coming up. That may change. We're kind of waiting to see. So, but is it really worth waiting until the spring? I don't think so. Interest rates may be higher, but you got more inventory you can shop around, okay? That's what this is. That inventory is up there, okay? Things start to decline after December and January, all right? There's little competition to drive prices up. I've only seen one instance of multiple offer situations here in the last few weeks. And it was actually my listing that I just put up in Wyoming. That was an under $200,000 house. We had 3 offers on it. A year ago, we would have had 20 offers on it. We had 3. But still, there's very little competition that's going to drive those homes up. So with no competition means that you can probably dictate some of your purchase terms. You can negotiate, you can do your inspections, do your due diligence, ask for repairs, things like that. You get the better purchase price now. Look at where, again, these prices are, okay, compared to where they were. They come down in November and December, and then they always go back up the following year. So why not buy in on the downward side of that cyclical trend when it comes to pricing, right? You can always refinance later if rates improve. Okay, we are still projecting some rate cuts throughout 2025. So we've got to stay in front of that, because the problem is if you wait, you might be able to get a little bit better interest rate. But here comes this cycle again, going up. Demand goes up, inventory dwindles. What does that mean? It means the prices go up. Okay, more competition, higher purchase price. In multiple offer situations or in tighter markets like this, you really can't dictate your terms. So you might have to waive an inspection. I don't like doing that. I hate waiving inspections. That's one of the things I despise the most, to be honest, in these tight markets. But in certain instances, that may be the only option there to get the home that you want. So if you can't do an inspection, you can't find out if there's an issue, you may be on the hook for some repairs down the road. You can't really negotiate in tight markets like this. So there's less inventory to shop. And again, you can't refinance to get a lower price. You can refinance later if rates improve, but you can't get a lower price. So waiting might not be the best thing. So now is the time to probably have this conversation. If you want to chat with me, I'm happy to. It might not be the best time for you in your situation. That might be the case. But let's have that conversation and find out for certain if that's truly the case. Because otherwise, buying now, and you can see from charts, the graphics here, it might not be the best thing to wait until next year or wait till the rates come down, because so is everybody else. You and everybody and their brother are all thinking the same thing. And what happens when everybody re-enters the market? Demand goes up. What happens when demand goes up? Prices go up. Okay? Those are the things that you want to be cautious of. And your little bit of an interest rate improvement by waiting for that might wind up costing you more in the long run because the home values have gone up. So lots of things to think about. I know we're heading into a kind of an epic time of the year with the holidays coming up, New Year, things like that. But if you're serious about buying a home, this is why you might need to look at this and reevaluate if now is the right time versus waiting until next year. Okay? Feel free to reach out. Kellen Keck, City2Shore Port City Associates.